This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. Dan O'Brien, K-State grain economist, kicks off today's show with a grain market outlook. He shares on the futures market and takes a deeper look at acreage for corn and sorghum. The show continues with Antonina Broyaka, K-State Extension Associate in the Department of Agricultural Economics, as she provides an update on Ukraine's losses and what 2024's commodities may look like. Weather with K-State meteorologist Chip Redmond rounds out the show. He says how part of Kansas can be expecting severe weather and how they should prepare. That and more is coming up ahead on Agriculture Today. You're tuned in to Agriculture Today, and we start our Friday show with a grain market outlook. And as always, we're joined by K-State grain economist Dan O'Brien. Dan, thanks for joining us today.
Yes, thank you, Shelby.
Dan, starting our conversation as we normally do with what are futures looking like?
Well, we're sort of like the duck swimming in the water with a lot of things happening under the surface, but on the top it looks like it's pretty smooth. So that's not far off of all the fundamental things and questions that are roiling around right now. Yet the futures, I'd contend the futures markets are showing decidedly less volatility than the amount of news and back and forth and uncertainty that's out there represented in the market. And for instance, when you look at the futures, May closed at 441. May corn did up about 3 cents, and we haven't had a lot of major changes of late in the corn market. You look at Dees corn closed at 476 and a quarter. So again, about 35 cents. I guess I'd call it uncertainty. Some in past years have called those risk premiums. Economists debate over that. But whatever that is, the amount of questions that we have in the market, some of them about still differences in what the USDA says and what in-country sources say in Brazil, and problems creeping up in Argentina, late season, all that's there. The market is not taking that into much response until they get some confirmation. And that confirmation is likely to come, at least the chance for it, in either the May 10th or the June 12th USDA WASDE reports. But that's really where the market's focusing at. And I would say when you look at the May corn chart, again, not a lot of change. We had been trading as low as 425, as high as 445, now down to 441. That's within the last couple of weeks. So not a lot of change there. I would say also when you look at the soybean market, May closed yesterday at 1162, November new crop 1175. So again, about a 13-cent difference, but that's really not much. And the price patterns for the May contract, and again, we're almost to the place. Gosh, we're within a week of the end. Well, next week will be the end of the month. We'll be entering into the delivery period for the May contract. So we'll start talking about the July contract and have some of the volatility that can come into the market from entering a contract delivery periods that might come into play. But anyway, again, we had traded as low since February as about $11.30, $11.29, as high as about $12.28, something like that, and are at 11.62 and 3/4 as of yesterday. So it just sort of is what it is. If there's a market that's showing more movement that we're paying attention to, it would be on hard red winter wheat. The May contract closed yesterday at 632. That's been up. We've had 5-6 or so days of markets moving higher. Well, for various purposes, I guess. And the July contract, 640, interesting carries now that you're seeing from May 632, July 640 and a half, September 652 and a half, D 670 and a half. It's a market that's displaying a little more movement on the chart side for May again, and we're getting close to contract delivery. You're looking at May from closing at 632 yesterday. It wasn't but about 5 days ago that the market closed in essence at about 580. So we've gained 50 cents in that market. questions why. We're wondering about the crop conditions report. There's a report that the USDA NASS crop prospects report came in and showed about moderately worse conditions than we'd seen before. There's still the looming fear of what dry conditions could do in the Western Corn Belt here in coming months. But overall, you've got a market that's moving to the high side. And what I'd like to do is to, as we go on today, talk a little bit more about the feed grains, probably corn, sorghum, maybe a little bit of soybeans, but then next week to really, as we're getting all that much closer entering into May, to talk about the wheat market in depth and see where things might go. So I'd hold off a little bit on wheat, but focus on these other crops if we can.
And taking a closer look at corn and sorghum, and first off, the USDA projections you're expecting are a little low compared to what you're actually seeing.
Well, I always have to be careful when I start talking like that because the USDA they take judicious steps. They're not panicky. The USDA projections for acreage, especially for yields and usage, as a rule, start out with the idea of being steady, objective projections of where supply demand forces might go. However, came out of the Ag Outlook Forum in February in the D.C. area, Washington, D.C. USDA had projected about a $4.40 per bushel price for the coming marketing year, the one starting with the next harvest out there from September 1st on, but then got a lower corn acreage number than had been projected, ending up now at about 90.04 million acres planted. That's about 2+ million acres less than they had looked at. Their projection, of course, was 181 bushels an acre, with the highest we've ever seen so far as a U.S. yield, 177.3. So you kind of have the battle of expectations. Do you go with the trend line theoretical yield of where you might end up at, or the highest we've been? So at least in my thinking, let's say there's about a third chance, 33% chance that we actually get about 4 bushels an acre higher than we've ever had at that 181. And if we just scale back to something at which it would be a good yield, like last year, 177.3, it makes all the difference with these new acres numbers from about a 14.9 billion bushel corn crop with the lower planted acres down to about a 14.5, 14.6 ending stocks. You're still ending with the 177.3 billion bushel figure. You're still right at 2 billion bushels, but it makes a difference given where we're at in these price relationships, 50, 60, 70 cents. So the USDA projected about 440 back in February. The futures markets are projecting right now about a 501 figure. By my estimates, it's more like 515. So again, the market right now is looking at USDA numbers, 440. It looks to me with lower acres and more historically tracked yields that were probably closer to $5. So, that May 10th WASDE report will be the first time the USDA puts out its projections for supply demand balance sheets in the WASDE reports, and my anticipation is that they'll still be at 181 bushels. They'll still be pretty pessimistic on things until they get more evidence. All that said, to me, the question is, do we look at a 440 low at harvest, or is it more something over $5? And there's pretty ample evidence to think that $5 is just as possible as the 440, and that's basically what the futures are saying.
And for next week, we'll take a deeper dive into soybeans, but do you have a preliminary analysis for us right now, Dan?
Yes, for soybeans, whereas the soybean numbers that the USDA had projected in its Outlook Forum were basically at, I think it was about 87.5 million acres, came out in that in the prospective plannings report at about 2 million acres less than that. Well, exactly 2 million. And I don't have any qualms with their 52 bushel per acre yield, although that'd be just about tied with the record high. But 52 to 50 bushels per acre makes a difference. When you come in and look at the bottom line of it, it's the difference between about a 4.4 billion bushel crop versus about a 4.2 ending stocks. If usage doesn't change, ending stocks with the USDA's projection, higher yields, about 357 million bushels, not a big deal. Ending stocks about 8%, about steady as she goes. If it's 50 with any problem at all, and we've seen 50 quite often, that's been about the average of late, then you're down below 200 million bushels, down to just over 4% stocks to use instead of about 1120 like the USDA had projected in February. It's more like 14. So I understand the reticence of futures right now to price in risk, but I just do think that there's a fair probability that the USDA's, again, assumption of normal yields, big crops, it at least has a question mark beside it for now. In fact, I put about a 40% chance on the USDA's projection for soybeans with their yields versus about a 60 with something lower, and that would put us at a higher soybean price than the November futures are showing right now.
Dan, as we round out today's conversation, and this is our last one in April before we hit May, anything producers should really keep an eye on entering into May?
Well, they'll be planting crops. Almost anybody that has spring crops, they'll be doing that. I think that and a fair number of them probably still have unsold cash grain. So I think I'd have about 95% of my attention on what you have to do to make money is get the crop in, and also be watching wheat too, to be careful of diseases, whatever else might come in. But then at least have some price goals out there. A bell ringing on your cell phone is about what it comes down to now these days, so that you don't get so busy that if we would start to rally for whatever set of reasons, that you wouldn't miss out on the ability to say, hey, I want to deliver some grain, or tell someone with trucks from an elevator to come and get it, something like that, just so that the time of busyness doesn't keep them away from the seasonal volatility that could give us some marketing opportunities.
Dan, I appreciate you taking the time to join us today.
Thank you, Shelby. Take care.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but we'll be right back. You're tuned in to Agriculture Today, and we continue our show with an update on Ukraine and the Black Sea region from K-State Extension Associate in the Department of Agricultural Economics, Antonina Broyaka. She begins the conversation by giving an update on the current damages and losses.
Today, total documented damage in the agricultural sector amounts to $10.3 billion. The largest category in agricultural damages is destroyed or stolen agricultural machineries and equipment, which amounted to $5.8 billion, or 56.7% of total. About 181,000 units of agricultural machinery and equipment were partially or completely damaged due to the invasion. 11.3 million tons of storage facility are fully destroyed, and 3.3 million tons are partially damaged due to the invasion, resulting in total of $1.8 billion damage. At least 2.8 million tons of grain and 1.2 million tons of oilseed are considered damaged or stolen, which doesn't include harvested grain by Russia on occupied territories. Thousands of people were killed in Ukraine, but also many animals. In total, the war led to the loss of 238,000 heads of cattle, 544,000 heads of pig, 131,000 heads of sheep and goats, and almost 13 million heads of poultry. So, despite the war, Ukrainian agriculture remains the most important branch that fills the budget of Ukraine, feeds Ukrainian and many other nations. Agricultural sector has always been the main driver of the Ukrainian economy, making up the largest share of Ukrainian GDP and export revenue.
Next, Antonia talks about the current state of Ukrainian exports.
As for today, in April, we exported almost 4.9 million tons of grain, more than 2.8 million tons than in April 2023, due to high export of wheat and corn. However, totally in this marketing year, we're still behind compared to the previous marketing year. Although the volume of grain export increases, income received is mainly lower than in previous year due to lower prices on the global market. And also many farmers have losses for 2 years in a row and not able to increase their production.
She then talks about the prices on Ukrainian grain.
Unfortunately, Ukrainian grain still remains the cheapest, but the gap between world prices and Ukrainian prices are narrowing. Since the middle of March, we observe growing tendency, mainly on all grain markets, not for American wheat and corn, but mainly prices increasing. And American price was a little bit higher, so they're getting closer to world prices. Ukrainian wheat has been traded lately for $200 per ton, $20 less than American and French. Ukrainian feed wheat was traded for $183 billion per ton, $22 cheaper than Russian. Ukrainian corn had traded for $181 per ton, just $8 cheaper compared to American. On the barley market, there is a largest price gap between Ukrainian and world grain. It was traded for $178 when Australian barley was $234. And there is a lot of talk about this in Ukraine, that we kind of losing barley production and barley market is dying.
Antonina now provides us with a 2024 outlook.
Grain and oilseeds production. That is kind of our harvest in 2023-24 marketing year. Totally, we harvested 58.5 million tons of main grain crops. And due to liberation of some territories, we were able to harvest even more than expected of wheat, barley, and peas. However, more than 7% of corn crops, or around 300,000 hectares, were not harvested. So the final result for corn is 29.3 million tons. For the majority of crops in 2023, yields were better, not only compared to 2022, but also to 2021. In particular, wheat yields per hectare increased for 18%. This is just to our rich soil, favorable weather conditions, and usage of some good quality seeds from donors that farmers received under the USAID and other programs. But for the next year, we do not expect such good results. We expect reduction in yields and harvest due to lower and lower application of fertilizers and plant protection products, unless, miracle happens. Spring campaign started, but many crops, it is just at the beginning of sowing. So it is hard to make final estimates, but we expect to plant 2.6 million hectares of grain crops, which 26% less than in pre-war level, and 7 million hectares of oil crops, which is going to be 500,000 hectares more than in 2021. This switch is related to the problems with corn harvesting and smaller losses from production of oil crops compared to grain crops. Totally, we expect to plant spring crops 2% more than in previous season, but it is still 16% less than in 2021. I highlighted soybean for a reason. Last year, its crops increased for over 500,000 hectares. And this year, we expect a further increase, totally for 55% compared to pre-war level. As for now, we plan to sow around 2 million hectares of soybean, but I also heard some estimates up to 2.2 million hectares. The outlook of Ministry of Agrarian Policy and Food of Ukraine for 2024 is around 74 million tons, including 52.4 million tons of grain and legumes and 21.7 million tons of oil seeds. There is more significant decrease in grain production rather than in oil seeds production due to crop replacement. Next season, we expect to harvest 26.7 million tons of corn, 2.6 tons less than in 2023. The estimate for wheat is 19.2 million tons, 3 million tons less than in 2023. and 4.9 million ton of barley, which 1 million ton less than in 2023. But for oil crops, forecast is more optimistic. We harvested 4.8 million tons of soybean, and we expect in 24 5.2 million tons, or maybe even more, depending on final sowing area. We also expect increase in rapeseed and sunflower production. Decrease in grain production will consequently lead to decrease in grain export. We expect to finish 23-24 marketing year with total 53.2 million tons of crop export, including 45 million tons of grain and 8 million tons of oilseeds. But the next 24-25 marketing year expectations are very pessimistic. 43.7 million tons, totally including 34 million tons of grain. This season, we expect to finish with 26 million tons of corn and 16 million tons of wheat and 2.5 million tons of barley. USDA forecast lower for corn, but they increased this month their forecast for wheat for 1.5 million tons. Regarding the export of oil crops, soybean export will increase, but we expect further decrease in sunflower seeds export related to both harvest decrease and processing increase due to more stable sunflower oil export logistics. We expect that our ending stocks for this and next marketing year will be relatively stable, around 4 million tons, which is pretty close to our normal stocks before the war. Our production and export are getting lower and lower, but also there is a decrease in domestic consumption, both for food and fodder. There are several reasons for this. Since the beginning of the war, over 10 million Ukrainians left Ukraine. Some of them returned, but there are still around 6.5 million Ukrainians abroad as refugees. Another reason that we have still a lot of livestock that was gone, and to renew in short-term livestock, that is very complicated. Actually, also in terms of consumption, the latest report I read that in March 2024, 23.2% of Ukrainians stated that they have to save on food. And this is also increasing food insecurity in Ukraine in particular, even we are self-sufficient in production, but affordability is also the issue.
That was K-State Extension Associate in the Department of Agricultural Economics, Antonina Broyaka. You can hear her full webinar update by going to AgManager.info, or I will also link it in today's show notes on agtoday.net. We're cutting to a short break now, but stick around because we have more for you ahead. You're tuned in to Agriculture Today, and we conclude our Friday show with a weather update. And as always, we're joined by K-State meteorologist Chip Redmond. Chip, thanks for joining us today.
Yeah, thanks for having me.
Chip, what has the weather been like these past couple weeks?
We've had a wild gamut of weather, and honestly, the warmer conditions, much above normal temperatures we saw with breezy winds, was really the big impact weather we've seen, with a lot of drying conditions across the state. I talked to a producer in southeast Kansas, and he said the pond levels were dropping every day at impressive rates, and said that they were in a pretty dire situation out there just because of how warm and dry, and the growing season demands of both surface moisture and then also just atmospheric demands of moisture as well. So we did have some cooler weather last weekend. We had some areas that we saw get near freezing. I didn't see any widespread freezes, but I know there was freeze and frost in a lot of the valleys across much of northern Kansas. That's not atypical, but it's been a little bit of a wide gamut of weather conditions over the last week, except for one thing in common: no moisture.
And with that lack of moisture, have we seen big changes in the drought monitor?
Yes, the drought monitor, remember, the cutoff is Tuesday mornings. So, granted, we have had precipitation in the last 24 hours. That wasn't counted in this week's drought monitor. So the drought monitor that was released Thursday morning had this substantial expansion of severe drought, and we added 10%, which is a pretty big jump. Most of that was in central Kansas, where a very wide corridor. It kind of follows just along and west of US 81 in central Kansas. And then we also saw continued expansion of abnormally dry conditions with another 2% increase. And now we have 98% of the state is in abnormally dry or drought conditions. I will mention there was a little tiny area in the northeast part of the state that did get some improvement. So it's not all bad news.
Parts of Kansas have seen some precipitation recently, and is that something we're going to continue to see moving forward?
Yeah, we had a good amount of rain go through north central and eastern Kansas on Thursday, and we had some severe weather in the northwest, and all that brought some much-needed moisture amounts. We're talking over some parts of southeast Kansas got over 3 inches of rain. Much-needed moisture, but that comes at a price where we are starting to see an uptick in severe weather. We have a very potent storm system that's going to continue on today, Friday, and then another system that's going to come in Saturday and Sunday. So we're in the midst of a 4-day severe weather event with hail and high winds are the greatest concern, large hail, and we do have a chance of tornadoes, especially Saturday, it looks like, for much of eastern Kansas. And that comes at a price, but we really need this moisture, and we also need this moisture more widespread. There's some areas that are going to get another 3 to 4 inches of rain potentially in eastern Kansas, but still far southwest Kansas is going to likely remain dry with some fire weather concerns. Where they're going to see gusty southerly, southwesterly winds in up to 40 miles an hour and with very low humidity. But a very small amount. We're gradually seeing spring kind of win and take over most of the state, and we're reducing our fire concerns. And hopefully this moisture that we receive in the next 4 days will be enough to keep things in check and keep things growing and really kick off the growing season. When we look at the long-term forecast in general, we don't have any... Monday morning, it looks like the coolest temperatures in central Kansas. We might get into the 40s. So we are above normal, and we are averaging warmer temperatures as well as we get later into spring. But the growing season is pretty much kicked off, and we're now we need this moisture to continue. And with the warmer than normal temperatures, things are going to grow pretty quickly.
Chip, you mentioned severe weather. Are there things that people should maybe do to be prepared for it?
Yeah, a lot of outdoor activities planned over the next several days. Just be aware of where your shelter is. If there's lightning, go indoors. And if there's a potential for severe weather, be able to get substantial shelter. We're talking a solid building that it has no windows and is well secured to the ground. And just be able to get warnings as well. Have multiple ways of getting notifications, whether it's your cell phone's one, but you need others. Radio is a good source through this radio station, and use NOAA weather radio as well.
That was K-State meteorologist Chip Redmond. That's all we have for you this week on Agriculture Today, but we'll be back with more for you on Monday.